What's up, everybody? Real fast, stopped in here to give you this quick video. This is going to be my second time recording this. The last time it was like some craziness in the background. So this is going to be how I use the ADR to catch breakouts and trade. A lot of y'all was asking me, what do I do in range and market? So I'm going to break it down. I'm going to show you everything right now. So in the last video, I currently moved my stop loss in this trade to 100 pips from my entry. So how did I get the entry? It was kind of simple. It was fundamental. So price hit the high of the day, then it reversed, then it hit this level, then it crossed my moving average, and as it crossed my moving average, it gave me confluence that price was going to go down. Also, I could look at the body of the candles and tell that this was ready to just go down. It's not really a lot of science behind it, but I traded the high and low on this trade. The high was very close to, you know, the price, and that means that price had to be breaking out. So what do I mean? Let me be a little bit more detailed. If the price is close to a high and low, and you notice the high and low is close to one another the day before, that means price is ranging, is consolidating. So when price is consolidating, that means that we're waiting for a breakout. The market makers are taking orders and they're determining if they're going to buy or sell. And how does that work? Well, it means that they're determining if they want to take some buys or sells if they got enough orders. Depending on how many buys are there, the buyers win. Depending on how many sells are there, the sells win. So boom, let's just break it down. So I looked at the ADR when this trade was in it. The ADR was 143. As you can see in the top right corner, if y'all not paying attention, right? What is the ADR? The ADR is the average daily range. So I keep telling y'all that this is powerful, and people keep asking. It's like y'all don't hear what I'm saying. Y'all don't watch these videos. Y'all don't show up enough to these type of videos where I actually explain this stuff. But I'm going to explain it, and whoever catches it, catches it. Okay, so, and like, comment, and subscribe. A lot of y'all not subscribing and liking the video or commenting. It's like I'm either getting 1 of 1 or 2 of 2, or not 3 of 3. I need y'all to like, comment, and subscribe. Okay, because the last 2 videos, it was like no comments at all there. Y'all was watching the video. I checked. 15% from Discord, 90% from YouTube recommendations, and then 10% from my subscribers. Of course, 10%. Y'all love that 10% number, my subscribers. Y'all love that 10% of traders, 10% of subscribers, 10% stuff. I guess only 10% of people win. But anyway, so the ADR is the average daily range, and today's pip count is how many pips the market gave out for the day. So we are well over our average daily range. That is why I moved my stop loss to 100 pips. Now, when I ended the trade, the ADR was 143. I was around 40 pips when I ended the sell, because as you can see, let's use the cursor to check. Price went up 27 pips right here. So when price went up here and we ended the trade, the ADR was around 40. But if you do the math, that's about, it should have been around 27 to 30 pips. Okay, I thought it was 40. However, if it was 40 and the ADR says 143, that means there's another 103 pips left to gain from the market. So when I ended the sell, I had enough confirmation from the fact that it bounced off the high of the day, and the ADR said there's another 100 pips to be made, that I was catching my breakout. Why? Because the market was consolidating. See, that's the first thing. The market was consolidating. That's the first thing you got to pay attention to. The second thing is the high of the day was right there and it bounced off of it, so it respected it. The third thing was, if you use any kind of confluence for price, it crossed the moving averages, and the last day it was ranging. So if the ADR says 143, you're gonna get 143 either up and down or you know, breakout. So we know from the consolidation, if the ADR saying 143, then we're gonna get another 100 pips. So you gotta risk it for the biscuit, and hopefully your confluence is right, and you take the sell. Took the sell, and news came out, and as you can see from this wick right here, this nasty wick, this was actually, you know, shaking us out. We was in this sell, and as you see, we stood firm. We stood firm, and when we stood firm in this sell, it continued to go down, but the news did try to shake you out. See, now as you see, it created this flat surface right here. You already, some of y'all know what this means, but the bottom line is this is a level. So what happened here? This was a level that let us know it's going to continue to go down. And when it got to the low of the day, it bounced off of it. Then it created this level. So what did it do right here? Why did it get to this point and bounce off of it? Well, it's simple. Price got to this point and fulfilled a bunch of buys, and that is why price is going up. So the bulls came in at the low of the day and they say, hey, we had enough of the sales, get the bids out of here, they push the price up. Now, if you pay attention, because this is another fake out, why do I think this is still going to go down? Well, I left my price here because I don't think this next candle is going to go all the way up here. Now, it could do what this candle didn't go up here just to stop people like me out. But the reason I think price is going to go down is because let's use the old conventional trend line. This is a setup, guys. Usually when you see the price is predictable like this, that is going to go up off the high. Just like it respected the high, it's respecting the low. Is it going to keep respecting the low? No, it got to create a new low. So what happens is Asian session is in 20 minutes, right? What I think is price is going to go down. Why do I think price is going to go down? Because everybody took some buys here. And, you know, if too many people take buys, the market got to get the money. You know, NFP week. Monday, I got destroyed because of NFP week. And I forgot. As much times as I got cooked on NFP, I got cooked now. So what you're going to see is a lot of people are going to fall for this and take this buy. And price is going to go up. I saw a trader the other day who traded this trade, and I was in the live stream watching it, and I wanted to type so bad, hey, you're trading a pullback, because that person was thinking that this was an actual buy setup when it's a scalp. It is a scalping buy setup. It is. This is a perfect for scalpers. Trading high and low is a really good strategy for scalpers, because you can use the high and the low like a support and resistance and supply and demand. It's all three of these things could be used the same exact way to trade, right? But boom, price is going to go down right here, and then I think it's going to shoot down. This is just a pullback. Some people think pullbacks are reversals, and if you don't know the difference, you will get cooked. The ADR has given us enough pips for the day, so price should actually start ranging at this point because it already gave us way more pips than we thought we would get. And then when it go into the Asian session, I'm suspecting price might go down and create a new low because so many people on that buy and they want to liquidate those people. Because one thing about the market is if it's too obvious, it usually is. The buy is a little too easy, it's a little too obvious. So I'm going to stick with the fact that I think this is a pullback, and I'm going to continue to stay in my sell. If I get stopped out, I'm at 100 pips because that's where I put my stop loss. So we're going to ride it out either way. So let me break down how I use ADR one more time, and I'm going to explain it to y'all so y'all get this whole strategy, okay? This is the high-low indicator that I have. This is my custom-built indicator. It is a talking robot. Whenever the high is created, it's going to say new high on whatever pair you're trading, and this is USD JPY. This is a pair that it was very good to me in 2022. It has now become my new favorite pair for 2023. So you're probably going to see me take a lot of trades on this pair because I seem to do very well at killing it. Why would I stop? So anyway, so we have this right here. Now, the ADR, let's break it down. When I ended the trade, it was around 30 pips. ADR was giving out 143 as the proposed amount of pips that we're going to get for the day. We were so close to the high and it respected it, so that means the next sell that came was going to be a large sell. So I took the sell, and as you see, we recovered 118 pips at the current time of recording. Now, the reason that I'm good with this is because I got what the ADR was giving. So average daily range is the amount of pips that is expected for the market to give you for that day. Today's pip count is how many we actually got. So we were up 30, and then the market hit the high, and then it went down. So the average daily range could be in any direction. But if you see you're in a certain direction, and the direction looks right, and the average daily range is saying, hey, we got another 100 pips, then most likely you're looking at the breakout. This is how I determine I'm in a breakout and stay in my trade. So for people who scalp, if you ever want to learn how to intraday a swing trade, I'm giving you this source right here. This is how you do that. You're going to use the ADR to determine if your scalp is a breakout. If you are in the right direction and you feel like price is clear, there's no level of demand, supply, whatever direction you're in, there's no support and resistance in the way, then you're clear to go. Usually price doesn't just bounce off thin air. Granted, everybody can see the levels you see, but usually price is going back to a certain level, as some people would say on YouTube, quote unquote, filling a gap. Okay, so if you see that price is needing to go back somewhere, the next level is usually where price is going. The confirmation for that to be the right direction will be your ADR. So if you use the average daily range along with the trade direction, if you see there's more pips to be made in the market, then that is how you get your confirmation to stay in your trade. Okay, so I'm breaking it down, I'm explaining it to y'all, I'm giving y'all this right here for that be asking me. Okay, so when y'all be asking me how do I know, that's how I know. So if you see things arranging and you see today's pip count is 30 pips, like Monday, the pip count was like 40, 50, 60 pips on some pairs. That's ranging. We come today, it says 186. Because we were ranging coming into the session, the ADR is lower than the pip count for today's pips because that's what was going on, and then we broke out. So that's why we got more pips because of the news. Okay, so hopefully y'all understand this. I'm gonna end this video. This is my second time recording this, and as you can see, price is starting to kind of go back down as we head into the Asian session. And like I said, we'll see what price does, but I'm willing to bet that it's probably going to trap a few traders, and it might go back up, but I feel like it's not. I feel like it's not, because people look for the break of structure. A lot of people just enter the trade. They know a lot of people enter the trade, and really a lot of y'all, I know this is going to sound like some Gestapo stuff, but the bottom line is, if they know a lot of y'all enter the trade, that's when they actually do stuff like manipulate the price and reverse it. Your broker sees you put a stop loss in your trade, it might spread it out to hit it. But we'll make a separate video talking about the market and what the tricks really are that they pull and what they see and don't see. And people think stop hunts are not real. Yes, they are. All of that stuff is real depending on what you're doing. It's not necessarily that they actually see you taking your $10 trade. Is that they see a certain amount of orders when it's at a certain price, and if they want to liquidate that amount of money, they will take money and move the price. They will do that. They will, if it's $1 billion in the market and the market needs 100 pips to make 500 million, they will take that 500 million and put it in the market to liquidate that billion. I'm telling y'all, they will do that. Now, y'all can believe what y'all want, but they have to make money just like you're trying to make money, and they will do that to you. So believe what you want. But this is why I use indicators, because I need to be seeing what's going on. So people could be naked chart this, naked chart that. That's fine. I don't knock it. I could naked chart trade too, but I ain't breaking my neck when I don't have to. And that's why I'm using this high-low indicator to let me know what's going on in the market. It also comes with this ADR and today's pip count. And that's why I'm able to determine that I was in the right side of my trade and to stay in my trade. And as you can see, if you pay attention, that buy is looking real weak right now. Those wicks is looking real heavy. The bears is leaning on the price, and they are winning. And like I said, everybody who took that buy at that low of the day, you might be getting ready to get laid down. Okay, so it is what it is though. But like I said, NFP week, interesting. Usually NFP week Friday is I be messing up with that too. I'm not perfect. I be thinking NFP is the Friday after the first, but this week, that Monday had me thinking it was this week. I don't know, but either way, Monday was just terrible. It was a terrible trading day, period. It had me like, I ain't giving out no signals like that, baby. But once again, live in front of y'all see the pip count is going up because price is actually pushing down as we go into Asia session, just like I suspected. The trend line is a simple thing. Trend lines don't work. They work. It's just that the market is not going to respect that trend line if they need to get their money. So just understand, how do you know if the market needs to get their money? Use your ADR. Now, you don't have to get mine. You could get a free one. But just know that the ADR is very powerful, and a lot of people don't use it. I don't know why, but hey, if you're getting 10, 20 pips, you still could use it. It's going to let you know if, if the ADR is 20 pips for the day, and you enter a scalp on a pair that's giving out a 20 pip ADR for the day, you ain't gonna make no money. If I go to Euro USD, it's probably the lowest that I think I could find. If I go there right now, it's gonna probably be a lower ADR. But we had news today, so due to the fact we had news, it might be different. So I'm curious. I just want to see if it's going to be different due to the news, because USD news came out, and boy, my example was just proven. Look at this thing. Look at it. Look at how the news came out for USD, and the ADR is saying, didn't I tell you that ADR was low on USD? I said this to y'all. Now look, I did this live in front of y'all to make a point. I'm gonna show you. See how the ADR is only saying 76 pips for the day. And today's pip count is double that. It's 148, which is double what the ADR determined. Why? Because of the news. Now, Euro USD was one of the pairs that steamed me Monday. Why did it steam me Monday? Why did it steam me Monday? Why did it steam me Monday? I'm just fixing it, y'all. Why did it steam me Monday? I did that to fix the chart. It steamed me Monday because it gave out a small amount of pips, and it did it in this kind of motion right here. See how all of this was playing around for these 3 days? Thursday it started playing. Friday it was playing. Monday it kind of just, this was a clean move though. If you trade high and low, it was. A lot of people trade high and low. I think the Pip Society people trade high and low. I know that I'm in that group, and I be seeing that they trade the M's and W's, which is high and lows. Y'all ate. So shout out to y'all, because y'all definitely ate off this. But today, look at this. Look at what happened. Look at this crazy massive news off the low of the day. It never came back. And the ADR was the determining factor. You hit the low of the day, guess what? If the ADR, matter of fact, let's look at the session open and determine this, right? So the session opened here. This was the open for the session. It did like this. This was 5 pips. This was 4 pips. So all together, when it hit the low of the day, and it's gonna, the robot's gonna tell you, hey, low of the day, and you know that, right? Once you saw a price bounce off that and the ADR said 76 pips and you only had 9 pips before it hit the low, that was your breakout. See what I'm saying? So we had 9 pips and then price shot up. So you knew you had the other 70 to catch. Now, had you stayed in the trade, you would have caught, let's see what you would have caught. Because you would have caught at least 100 pips off this one move that I'm telling y'all about. So from that to there, you would have caught 147 pips. So the whole today's pip count came from the low. So if you would have traded from the low, that's what you would have got. You know our robot would have caught the trade, so you ain't even got to ask that. But I'm just showing y'all what the ADR is capable of. And that's how you know. When you take that trade on that buy from that low, you know you had another 70 pips in between you and the price turning around. And guess what? You would have got rewarded with a 1 to 10. Easy. So anyway, the video's long enough. I gave y'all enough juice, man. I don't even know if y'all be really appreciating the way I be breaking this down for y'all, but I'm in the video here, and hopefully y'all understand that's how I use the ADR, okay? So for those of y'all that be asking, there you go. I gave that to y'all for free. So hopefully y'all use it. So this is my custom made high-low indicator. It's not available on the site just yet. It's part of my private system. I'm gonna put it on the site because some people started asking about it, but I'm not ready to yet. I just don't feel like putting all my stuff on the internet for people. But just know that the strategy works no matter what you use. If you don't mind using an ADR indicator, put it on your chart and start using it, and I guarantee you the amount of pips you catch will start going up as long as you practice, okay? Use it in demo, do whatever it is you gotta do. But once you practice and get the hang of it, you'll have it. It'll be in your arsenal repertoire. So I'm giving y'all the strategy. Hopefully y'all use it. So y'all, I keep asking me, how do I know? This is how. All right, so I'm gonna end the video here, y'all. Peace.